Now to the markets. Joining us from the CME, Bob Iacchino, Chief Market Strategist, with Top Step Trader. Knowing you, I worry that you might just give a totally faux report and then make us look bad because we didn't remember it was April 1st. Can we trust you to be? You're going to talk. We know it's April 1st. No April Fool stuff. All right.
I'm Italian from Chicago, and you just asked if you could trust me.
Yeah, right.
What kind of sense does that make?
Yeah, you're right. In your heart of hearts, do you think the second quarter can live up to the first quarter for the equity markets, Bob?
I don't. I turned, let's call it bearish to neutral about March 4th, and I've watched the S&P rally, and that doesn't really bother me that much. I still maintain that we're going to be low double digits, high single digits at the end of 2013. That's my opinion, what my charts are telling me, where the year is going to end up. Having said that, stocks have kind of the most interesting profile of anything that I look at. There was a guest from Bank of America on Worldwide Exchange that made a great point. We lost 50% in the market in about 17 months, and it took 4 years to get it back. You can sort of shrink that into more of a micro view and say that we can lose 10, 20, 30% in, say, 17 weeks, and then take about 4 or 5 months to get it back. That's the way that the stocks work. They offer the most steady return over a 100-year profile, but you have huge drawdowns in the meantime, and that happens, and I think we're going to see that again this year. Having said that, I'm wrong on my call so far. I just feel like in order for me to get long, I need to have a solid pullback. I need to get some of the weaker longs out of the market. And those, to me, are the people who did window dressing at the end of this quarter, the people who just sort of bought because they needed to buy and aren't really keeping pace with the market itself.
Maybe the one thing that becomes a little concerning is that the news cycle, at this point, I would have to say, is explaining why stocks are going up. I mean, it's sort of in the news now that housing is much better, is much improved, and that makes the consumer feel better. And we saw Cyprus, but that's such a it's not Italy, obviously. And then you got the Fed, which the Fed doesn't show any signs of becoming less accommodative. They seem totally convinced that they need to keep this coming or else the jobs picture starts deteriorating again. So they feel totally justified to continue with this $85 billion. So those are all like positive things. 6 months ago, I would have had all negative things to give you. And now the news cycle seems like it is supporting higher stock prices, which is probably bad.
Well, it is. And I mean, the Fed does need to keep doing it. Right now, the heroin addict is on methadone, so to speak. I mean, the Fed has to keep doing this because hedge funds are following the money and the Fed is releasing the money. So you have to be long U.S. stocks if that's what your game is. That doesn't happen to be my game. I'm happy to be neutral stocks. I'm happy to be long gold. I'm happy to be short the euro. I'm happy to be short the yen. And those are things that I can participate in because I have a different profile than a long-only mutual fund or a hedge fund that's benchmarked to the S&P, but they have to buy it. Just for me, I need to get that pullback in order to get a pattern that allows me to buy it and to trade it from the long side. I just can't do that yet. Now, Cyprus is interesting because somebody asked me after I said, it was maybe 2 appearances ago, I said I can't be long the S&P, and they said, well, what's going to cause the S&P to fall? And I said, the thing that scares me is I don't know what's going to cause the S&P to fall. And then Cyprus came out. If you would have listed some things that would cause the S&P to fall, and it didn't fall that much, it wouldn't have been Cyprus. I wouldn't have picked Cyprus. That's like picking Cleveland. You know, I mean, it just doesn't make sense to me. So when I can't see the risks, that's what keeps me out of the market.
Okay. Were you a fighter? Was your nose ever broken? Yeah.
It's been broken 4 times.
Whoa.
It's cool looking.
Yeah, it's kind of cool looking, right? It fits my region.
No, I do. I think it's cool.
I mean, I'm
not
coming to you from Los Angeles.
If you threaten someone, they're going to take you seriously. You know?
I don't know, considering my nose has been broken.
Yeah, but obviously you're putting it out there.
You're not afraid to get in a scuffle, Bob.
Exactly.
No, I fought briefly. I lost, so I stopped. That's the way I trade. That is the way I trade.
All right. Thank you.